So now let's get into the bull case. I love the picture of there, that the bull. I can't help but always think when I see a picture like this, going to Wall Street in New York, they have a nice big bull on the street. It always a great thing, a great place to take a picture. So I always think of that. But the bull case is where I am, actually. I always like to look at the glass half full. For many of you that know me well, I at times I'm cautious, but when there are issues or blood in the street, as they like to say, that's always a good time to upgrade your portfolio, to look for good quality investments. I'm going to take the bull case here. And one of the reasons why I'm going to take the bull case, or why I think the bulls or the bullish people are in control, is unemployment. We still have record unemployment, the lowest unemployment rate really that we've seen ever in our country, in Canada, and in the US. So when people are working, earning a paycheck, have money to spend and pay the bills, even though our bills have gone up because of inflation and interest rates have gone up, which makes carrying debt a little bit more challenging. If we have a job, and if that job is paying us and our wages are rising, that is a good thing. And it allows us to be able to do the things we need to do to pay our bills and to go on trips and to buy clothes or big ticket items at the store. A bullish, sentiment that I have here, a chart here, is the JOLTS. Let's go with the JOLTS one first. As you can see, JOLTS stands for job openings and labor turnover. You can see that the actual chart is coming down. Now, for quite some time, we actually in the United States saw practically 2 job openings for every person looking for a job. And the Federal Reserve did not like that, because that meant that if you were in a current job and weren't making a lot of money or didn't like what you were getting paid, you could switch jobs and demand higher pay, because companies were looking for workers. They were dying to find workers. They couldn't find enough workers. Well, what we're seeing now is the job openings is starting to come down. At one point, it was 11 million job openings in the United States. Now we're under 10 million, 9.5 million. Still a big number, but definitely moving in the right direction. As I mentioned earlier, let's go to the unemployment chart here. You can see that unemployment spiked up, a few years ago. And now you can see how much it's come down. And when you look at unemployment right now, March of 2023 in the United States, it's somewhere around 3.5%, somewhere around 5% here in our country. But you can see that spike happened during COVID, of course, when people were temporarily laid off and everything was closed. But take away the COVID and the job situation, jobs numbers in the US look fantastic. So the bulls are in my opinion, are in charge. Lastly, I want to talk about interest rates. Today, we're going to hear a 1/4 point hike from the Fed, but I believe this could be the last interest rate hike in the United States. We've already seen a pause here in Canada. So obviously, we are a lot closer to the interest rate hiking cycle being over than the beginning. I think that's a positive. Even if interest rates stay high for a long period of time and don't fall as they're predicted to fall over the next year or so, I think this market can continue to move higher. I don't necessarily believe that we need lower rates for this market to move higher. We just need some stability. We need to understand where rates are going to be, and we need to figure out, okay, if interest rates are 5% in the US and 4.5% here in our country, I think the market will be able to gain some traction, understanding that this is as high as it's going to get, and it's perhaps at some point going to go lower, but at least in the meantime, businesses can account for it. Banks, more importantly, can account for these higher rates and learn to deal with it over time. So in my opinion, with rate cycle or the higher interest rate cycle coming to an end, with jobs still fantastic job growth, not as high maybe as it was a few months ago, but still we're seeing good job growth, unemployment rates at record lows. We're seeing job openings starting to come down. We're actually seeing 80% of businesses this past quarter beat expectations. That's another positive. And we'll get to quarterly earnings in the next segment. But we're seeing businesses beat the expectations. There'll be lowered expectations, but businesses are still doing better than expected. So I would say that, in my opinion, the bulls have things under control. So depending on how you want to look at things, whether it's the bullish or the bearish way, I've given you many ideas as to how to look at the current economic environment. But again, I think it's always good for investors to keep that glass half full and not half empty.